Yesterday, world-renowned trader Anne-Marie Baiynd joined us for a live TradeWave webinar. She walked through exactly how she uses TradeWave to spot opportunities, and then she placed a short-term trade on Dexcom DXCM right in front of the audience. That trade is already fully profitable. Let's take a look at how she did it.
Let's look in the S&P 500. And what we're going to do is sort of put some short-term trades on so that you can see, if you wouldn't mind putting TradeWave back up, sir, when you put it up, and then I'll
I
give you
didn't
my
know if you
screen.
wanted to put
Yeah,
yours in or not.
yeah. No, we'll put yours up, and then we'll just pick a couple of them, and we'll see the strength of the overall framework, and we'll see what we're looking at, right? So we see the Wilshire, but options in the Wilshire aren't as robust as they are in the S&P 500. So let's go there. And we are looking at the next 15 days or so. It's loading.
Huh.
Yeah.
It actually slows down whenever I run
Yes.
for some
Yeah.
reason.
Mine just,
There,
there we go. So let's take a look at that, and you'll see that compared to the Wilshire and the S&P 500, there are a lot more longs than shorts.
oh, but we didn't. The only time we saw more
Oh, okay.
when we filtered to the
Oh,
next.
yes, please. Let's do that. Let's do, okay. Yes. So here we are. We can see that for the next 15, 20 days, we've got a lot more motion that's giving us downside pressure. So the question might be, how do we want to trade that? And so let's pick a couple from the let's pick a couple from here. Let's rank this for oh, Dexcom. Let's look at Dexcom. They've got great volatility.
It's a short one.
Yes. I want to look at shorts for the next couple of days because certainly I think price action is going to be short in general.
Yeah, I mean,
Uh,
with the anticipation of the rate cuts, things were going up, but I think that's done.
yeah, yeah, I do. Well, there's a lot of hedging going on in the broad market right now, and tomorrow is triple witching. And between the 19th to the 25th or so of September, it's got itself a little bit of uh, negative flow. So as we look at Dexcom, let's go into the next bottom panel. If you could advance that so we can look at a couple of the, right? So it says short, it says a 16-day hold, right? So we would probably be looking at October to take a spread. And then it's got, 10 winners and one loser. And so we're looking at something that's very statistically probable in this space, with the average gain on the short of 7, but the median being about 5.
Yeah.
Okay, so that's what we're going to look at. 5% move. This is how I use TradeWave. So I'm going to show you. I'm going to take the screen for a moment, bring up Dexcom, and let's maximize the screen here. And then we will open up the share box. Thank you so much. I'm going to send you a request. Perfect. All right. And then I'm going to share. All right. So here's my Thinkorswim. I've had this for, a bazillion years.
Okay. We still don't see. I'm gonna stop sharing and uh, Oh, there it is. Now we can see it.
All right. So I'm looking at a 4-hour chart simply because we are only looking at a very short time frame formation. And so we can see we started the month at 74. We're looking for a 5% move, so that's about $3, maybe $3.50 in terms of the motion. And you can see that it literally moved $3.50 this morning because the price action is so aggressive. So a couple of things we can do right there. We know from the stats, so we're going to go from the stats. We're going to go to the Analyze tab. Oh, this is great. We actually have this Dexcom formation that's going to expire tomorrow, but we'll see what goes on for the next little bit. So we have until the 26th of September, but this cycle tells us to hold for 15
days.
15 days. I'm trying to get I believe that this Mac kind of struggles under all of these things going together. So let me shut down a couple of memory hogs, make sure I've got that going. Okay, all right. So here we are. Let's take a look at this. 15 days puts it October the 3rd. I'm going to use October the 10th. All right. And so here's what we're staring down. Probabilistically, we're staring down a $3 move to the south. Now, it could be more, it could be less. So here's a couple of ways that you can trade this. One, you can do a very simple bearish call spread, and that's going to give us a $4 move. Maybe we use 69. And it'll cost a little more, right? $1.65 gives us a $5 upside pressure event in terms of being short. If it moves down into that range, your thought on this $1.65 spread is to say, hey, listen, when it gets to that 5% fade, right, which is about 375, something like that, you're going to say, I'm getting out of here. So you buy it at this level, and then you set a price alert in your chart that says, listen, tell me when this thing moves into $71.80, right? Crosses below that level, you've got yourself a nice rotation. It tells you to get out. Okay? That's the first way that you can trade it. Sally over here, I am a big fan of the back ratio. And so what I will do with the back ratio is I will buy one and I will sell two. Okay? So what this tells me is if I'm sitting in a space, I don't think it's getting up over 75, right? It does require margin. This one back ratio does require margin. I'm going to collect $172. And as long as my price action stays below 75 plus 172, which is 100, which is $76.60. As long as it does not breach that level, this is going to give me some kind of return. Okay, that's the next one. For folks that don't like the back ratio and are saying, hey, I don't want any risk, you can simply look at the long put spread, or you can go to where you think price is going to come in, which is 71, and you're going to buy yourself a position right around there. Now, I am of the mind that if I can use somebody else's money to advance in the market, I'm going to use that leverage. And so if I actually think it's going to come in to 71, I might take the 71.67 spread. It'll put me in for half the amount. Now, this long put, if Dexcom falls off a cliff and heads down to $50, you're going to be in fantastic shape. But the probability that it does that sits outside of that bell curve. Because remember, TradeWave is telling us, listen, this has about an average median return of 5% in the option, in the price of the stock, if you're moving that down. Now, if you buy the put spread and you spend $165 and it moves into that 69 area, you're going to have a $5 ultimate gain against your $1.65. And so you're going to have a $3.35 gain, which is 100% plus. And so that actually it's almost 200%. So that's the difference between just selling the stock, buying the put spread, selling the back ratio, buying the long put, or buying a put spread near the support. Now, let's take a look at the probabilities of success. Right now, the delta says you have a 1 in 4 chance of this Dexcom position paying you. For the back ratio, the short back ratio, you have a 38% chance of this working in your favor. The long put gives you a 28% chance. That's how you read delta. And then this far out of the money put spread gives you a 14% chance of being on the right side. I always look for the sweet spot. Where is the way that I can make some money? I don't mind using margin, right? I use margin every single day to trade. So I like the credit moving in this space. Now, you can also do a back ratio on the put side. And what this will do, it gives you a little bit more, right? If you say, hey, oops, that's the wrong one. If I say, hey, listen, I'm going to sell 2 of these. And whoops, that's 3, Fred. And I'm going to buy 1 of these, right? Notice this one gives me a $2.70 credit. You might go, what? But see, here's the beautiful thing about this one. If you have your 2 to 1 and you're looking at, let's go see how the risk profile looks here. Let's go to the risk profile, right? What this tells you is there is certainly risk if this chart moves all the way down. But if it holds like it's supposed to, round and about that 71-ish area, you're still going to end up having a credit because this price action doesn't give you a rough time until you've lost $71.33, right? And 71 is about the average. You might say, hey, maybe because of that, I'll do a 72 and then 71, right? And the credit there will be a bit less. It'll be 185, but it's going to go right into that relative support area, and it's going to hold you really well, right? And this means, hey, you can take both sides of these and get a little bit more than $3 because they're not both going to go into the money. And it might be that neither of them go into the money because they're sitting right in the middle of the sweet spot. It really just depends on the type of trader you are. And I like that risk event. See, it looks a little bit like an iron condor, little squishy. So as long as it doesn't move above 80 or below $69.50, you're going to make money. And you've already collected it up front. Okay, so that's I know that's kind of complicated. I don't know how many of us spend time moving in and out of option chains, but I like to think of option chains as a giant mixing board. For those of us that have seen those mixing boards on television, because most of us don't sit in, recording studios, they've got 200 levers. And the option chains are just like that. And when we have something like TradeWave that tells us, statistically speaking, what's going to happen, our choice should be, I'm going to take a position where this is for me. I'm going to take a position where nothing happens, where a little bit happens, or or a lot happens. And so legitimately, I could take the 74.69 long put spread, and I could take the 75.76 callback ratio and the 72.71 putback ratio. And so all of those positions give me an opportunity that says, as long as price either goes to where I want it to, sits in the pocket, or doesn't do anything at all, I'm still going to make money.
Wow, that makes a lot of sense.
Yeah, so the question might be, well, what if the wheels come off the bus? That's why we put alerts on our chart, right? We put it down here at 71. We put it up here at our 76.
Yeah. And if you look at TradeWave, you can
Yes,
see
let's go back. Take it back, if you wouldn't mind. Can you take it back? I'll stop sharing.
in 2017, let me share my screen. Of course, this is not as interesting as what you're showing, but here is
Oh, it's all very interesting to me.
look at 2017. That was a 40% drop.
Rough, yeah.
And what I did, I clicked on MFE and MAE, both of them. Let me just look at MFE. You can see that the drop was incredible.
Yep.
So if you were actually in there and you went you hit this, you could make a lot of money.
Exactly.
And
Exactly.
MA
So,
would be the drawdown, and worst year was 2020, was up 7.86%, but then it came down and closed
yeah,
lower, just a
yeah.
little.
So the great takeaway there is, statistically, listen, everything we look at involves data. And the most certain thing we can say on a daily basis is we really have no idea where the market is going to go. We have a clue And so the goal is, are we positioning in a space that allows us the opportunity that if it works nicely. As long as we have our alerts, we know when price action is going to get in the way. And can we position so that no matter what, we end up making some cash? And so I love that because all these returns, of course, are on a bell-shaped curve. We can see that 2017 was a very outsized formation. If we only did 5 years, Afshin, if would you do that for us and just choose 5 years? Wow, that still looks pretty sizable, right?
Well,
So we're looking at
no, it resizes this, as you
no,
can.
absolutely. I'm looking at the net negative 4%. That's what I'm staring down. Yeah, on the side. I see the lines, I see the histogram, but I'm actually looking at the returns on the left side of our bar chart. And so it's still got, good 4% returns. So,
Yep.
right? That's good. That's great. So I really like this. I really like this particular position. I like Dexcom as a company. Um, Medtronic is actually going to uh, split off their renewable instruments like a Dexcom instrument is. They have that, and so that is I think it's going to put a lot of downside pressure on Dexcom to see, because a lot of competition is entering their space. So I think there's probably more things for us to look at as time moves along. Now, next time um, we are together, I will try to have a few more positions set up. But what I wanted to do was sort of pick one and show you how many different ways you can do that. The last way that you can do it, which is a little bit on the riskier side, but the option chains are very nice in general. And I will, if you don't mind, I'll take the screen back one more time and I can show you this. Uh, bu- 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 So if you're so inclined, and you like Dexcom as a company, you could easily buy the stock and sell the 70 calls.
Yeah.
Now, you might go, why would I want to do that? First of all, if the price action fades into this time frame and you get called away at 70 and you sold the call for $5.40, you literally are still going to be up over $1, right? But not a lot. It's a couple of percent. But you can also sell twice as many of those and buy a call spread on the bottom. And what that actually does is super interesting. It gives you a short call that says, hey, I'm going to go into 70. And take a look at the risk profile here. As long as this thing does not move above 74, you're going to make a ton of cash. If it
Right.
goes to 70, it's going to be absolutely beautiful because you collected $8.60 more, right? So your cost is going to be $66. And so there are so many ways to use option chains to make money. And as long as you're managing your risk events and you're saying to yourself, okay, this is what I'm thinking, this is how I'm moving, right? you're going to be in terrific shape. You really are going to be in terrific shape. So that's it for me. I gotta hop on to another meeting, but I thank you so much for having me. I look forward to the next time we're back. Next time, maybe you guys could talk to Afshin and say, hey, could she discuss X, Y, or Z next time? Could we look at X, Y, or Z next time? So next time we come together, we'll be into this particular space. And so we'll really be able to see how well these trades did. And there's a lot of stuff that we can look at here where you can see how amazing TradeView is at allowing you to capture gains in the market, particularly if you're looking at it going, I think I'm going to use the option chains. I'm going to get leverage, and, the stock would be only a 5% move, but, I'm going to make 30% because I'm using the option chains.
Yeah, and if just as a remember, if you select the MFE, you can actually see what the extent was. So in that case, we were seeing it as pink. And if you go into option, you can capture those too.
Yes, absolutely.
So
Absolutely.
that's my favorite thing, is capturing something that I know is going to go away.
Yes, absolutely. Absolutely. That's also a way that we can take a look at these things. So maybe we'll touch on that next time. But thank you so much, Afshin. It's great spending time with you. Great to see everybody. I look forward to the next time. And
I really appreciate it.
my pleasure. I love TradeWave. It is a fantastic product. Fantastic.
Thank you. Thank you
All
so
right. Take care, everybody. I'll see you
much.
soon. Bye.
So Anne-Marie placed these trades on yesterday, which was September 18th on Dexcom, and today, September 19th, Dexcom already dropped. So it had dropped about $3 this morning, and right now it is down a total of $8. It's dropped to $67. A substantial drop for one day, but let's take a look at what happened to these trades. As you can see right now, this is Dexcom from yesterday. Take a look at the stock price right here. It was $74 when the trade was being placed. And here's the first one. There's the debit spread. So when we buy a debit spread, we want the price to go up. And here is a back ratio with a credit of $1.57. Whenever you see a credit, we want that credit to go down so we can buy it cheaper. Let's take a look at, now this is today from this morning, which Dexcom was still higher than now. It was at $71. Look at what happened to the debit spread. The debit spread went from $1.65 to $1.68. Made slightly more than $1 on this. And the back ratio that was sold for $1.57, now it's worth 60 cents. You can buy it back and make almost $1. And the same with the rest of them. So you can see how Anne-Marie Baiynd uses TradeWave, which is very interesting, and she will be on more often in the future. So please subscribe, and so you don't miss anything that we put out.